Everyone thinks Bitcoin is competing against Ethereum, Solana, and the rest of crypto. Michael Saylor believes that's the wrong game entirely. While investors argue over tokens, Bitcoin may be positioning itself to absorb a share of a $300 trillion global credit market. And if that's true, the biggest Bitcoin opportunity may still be ahead.
I think the story on Bitcoin is Bitcoin dominance keeps growing. If you chart Bitcoin, crypto dominance as a percentage of market cap of all the crypto assets, taking out the stable coins, like throw out Tether and Circle, Bitcoin hit a low of about 41% in the height of the FTX era, like 2021. And then Bitcoin has been grinding up from 40%, and now it's like 68%, 69%-ish. So Bitcoin dominance is now, it's getting close to 70% of all the market cap.
For most investors, the crypto market still looks like a giant technology race. Ethereum, Solana, Layer 2s, yield protocols, AI tokens, meme coins. The assumption is simple. Competition creates value. But what if money doesn't work that way? Historically, monetary networks don't share power. They concentrate it. Gold absorbed monetary energy. The dollar absorbed monetary energy. And now, Bitcoin may be absorbing digital monetary energy. That possibility creates a dangerous blind spot. Most investors are still evaluating Bitcoin like a technology company. Saylor is evaluating Bitcoin like monetary infrastructure. Those are completely different frameworks.
What you see in the rest of the crypto market is there's a competition between Ethereum, Solana, BNB. For the long time, SWI was the next Solana, and then that collapsed, and now there's Hyperliquid. And then there's competition at the layer 2s with Arbitrum and Base. And all of those things have stripped the monetary premium out of all those crypto tokens. And I think that even the people that believe in the tokens realize that they're not money. They're not going to have a monetary premium. They're going to live or die based on utility, and they're all in a difficult competition. So I think the last 12 months have been really good.
Now consider what has happened over the last several years. Spot Bitcoin ETFs changed access. Corporate treasuries changed perception. Nation-state conversations changed legitimacy. And Bitcoin dominance continued climbing. While thousands of crypto projects competed for attention, Bitcoin continued absorbing capital. This is where most investors miss the larger shift. The debate is no longer whether Bitcoin survives. The debate is what gets built on top of Bitcoin. That distinction changes everything. Because if Bitcoin becomes digital capital, then entire industries emerge around it. Credit markets, yield markets, treasury products, corporate finance, collateral systems. The opportunity expands from a trillion-dollar asset into a multi-trillion-dollar ecosystem.
The position of Bitcoin as the dominant digital monetary network. They've established Bitcoin as digital capital. I think we've proven digital credit is an idea that works. And at this point, the market loses its mind, and at the end of or in the bottom of a bear market, and so there's a lot of sound and fury. But if you look beyond that, and you're here at Bitcoin for Corporations, you're a corporation. So I tell you, like, you want to make billions you want to save money, then you buy digital capital or you buy digital credit. That's how you save money. If you want to invest money, then you invest in a combination of digital capital, digital equity, digital credit, or you lever it to create digital yield, or you do something like that. You're an investor. If you want to make money, you have no money, you want to make billions of dollars, and you've got like 3 people and you started a company. If you want to make money, then the smartest idea is to create a form of digital money or a form of digital yield or digital income based on digital credit, right? And I think that's the next interesting topic. And there are 10,000 opportunities, each one of them $1 billion opportunity to create a digital product, or a new digital asset, digital fund, or a digital service that's all based upon emerging market opportunities.
If Saylor is correct, the implications extend far beyond crypto. Banks would need Bitcoin-backed credit. Corporations could hold Bitcoin-backed reserves. Money market funds could evolve toward Bitcoin-backed structures. Entire layers of financial infrastructure could migrate toward a Bitcoin standard. But this is where skepticism becomes important. Many investors argue Bitcoin remains too volatile, too young, too risky. And yet every monetary network in history started small before scaling globally. The question is not whether resistance exists. The question is whether resistance can stop adoption.
If you put on the Austrian economic hat and you look, what is money? Well, gold is money, everything else is credit, according to JP Morgan 100 years ago. Bitcoin is money, everything else is credit, according to Michael Saylor 100 weeks ago. That is true, right? Everything else is, everything else has counterparty risk, and Bitcoin is the form of capital which doesn't have that. So when we describe, Bitcoin is a lot of things to a lot of people, I get it. When we describe a stack, a digital asset stack with digital capital, that is a fiat term. We're basically saying digital capital is competitive with metallic capital, real estate capital, equity capital, and credit capital. Digital capital is a fiat term. Bitcoin is much more than that, right? When we say digital credit, that's a fiat term. It's digital credit competing with mortgage-backed credit, junk credit, private credit, sovereign credit, investment, corporate credit, et cetera, et cetera. When we use the word digital money, it's a fiat term. It means zero vol digital currency with zero vol backed by Bitcoin that pays a yield.
Here is the part almost nobody is discussing. Saylor isn't trying to replace the existing financial system overnight. He's trying to bridge it. The global financial system contains over $1,000 trillion of capital. Bitcoin currently represents a tiny fraction of that. But if even a small percentage migrates into Bitcoin-backed credit instruments, the scale becomes extraordinary. Suddenly, Bitcoin is not competing against crypto. Bitcoin is competing for a share of global finance itself.
And so what we're building, Matt and I and other people that are building on this, whether it's like people like Saturn or Apex, they're building either digital yield or they're building digital money, and we're building digital credit on top of digital capital. And the objective is pretty simple, right? We want 5 or 10% of all the credit in the world. So if the credit's 300 trillion, we want 15 to 30 trillion of it to flow into Bitcoin-backed credit instruments. And then we want 5, 10, 20, 30% of all the money markets in the world to flow into digital money, right? And at the end of the day, the idea of perfect, the conventional view of money is a medium of exchange, a unit account, a store of value. And if you ask, how do you become a medium of exchange? Well, if you go and you crawl the web, you'll find that 99.99999% of all the prices in the world are denominated in fiat currencies. Like that's just the way it is. I didn't make it that way. It just turns out that 99.99999% of all the prices are US dollars or euros or yen. So if you want to create perfect money in the eyes of the people that have the $1,000 trillion, and they're the only ones that matter because they have the money and we need the capital. Their idea is it's pegged to the dollar with zero vol, right? Because that way I can exchange it friction-free without a tax hit in order to convert it into a currency and pay for anything. And it's in dollars, which is the unit of account of every accounting system of every multinational in the world, has been, will be. And it pays you a yield, which is in excess of the monetary debasement rate, which means that if you can get above 7%, then you've got a perfect store of value, medium exchange, unit of account.
Most investors still think the Bitcoin story is about price. Price is merely the symptom. Infrastructure is the story. The same way the internet became valuable because of everything built on top of it. Bitcoin may become exponentially more valuable because of the financial system built around it. Maybe Saylor is wrong. Maybe the existing system remains dominant. Maybe Bitcoin never captures meaningful portions of global credit. But what if he is right? What if the market is still arguing about crypto cycles while a new monetary architecture is already being constructed in plain sight? Because if Bitcoin truly becomes the collateral layer for global digital finance, then the biggest opportunity may not be buying Bitcoin. It may be understanding what comes after Bitcoin. And by the time the majority realizes that distinction, the transition may already be over. The question isn't whether the future is coming. The question is whether you'll recognize it before everyone else does. If you enjoyed this video, subscribe and let me know your answer in the comments.